Welcome to our university educational program. Today we're going to go through market participants. This is part of Forex Basics. As always, a reminder that we're going to go through this as educational information. Trading and investing involves risk, including loss potential and, of course, reward potential. There's both positive and negative trade results that will take place in trading. We are not financial advisors. So who participates in the markets? Well, you have government agencies in there actually making financial transactions. You have central banks like the Federal Reserve in the US or the Bank of Japan or the ECB. They're making transactions as well. You have large money center banks, be it, JP Morgan, Bank of America. You have hedge funds who manage money, and then you have individuals that manage their own trades, speculators as they're called, that also make transactions in the market. So why do governments and central banks do so? Well, they manage currency values. They are the ones that establish monetary policy. For example, they set central bank rates. Here in the US, it's called the Federal Reserve. So they set the rates at which there's overnight lending with banking institutions. And then banks will oftentimes set their rates based off of how much they can borrow from the Fed and so on. They also regulate and supervise transactions in the FX markets. They maintain foreign reserve volumes, adjust and propose monetary policy changes. In some cases, they'll even be in there doing transactions to defend the currency price or try to devalue the currency price. They do that. They try to change those values in essence to drive economic activity or slow down economic activity, depending on whether they're worried more about deflationary or inflationary impacts. For example, inflation would be when your currency is losing value and the cost of goods and services is going up. Those prices are being inflated. If that became too much of an issue, they may step in and try to defend the currency, thereby trying to keep inflation under control. Now, there's been mixed reviews when governments step in to try to do that, or central banks do, but that's kind of their role that they play in the markets. Money center banks, of course, there's transactions going off around the world, and there's interbank currency transfers. I took a trip to China a few years back, and my wife and I, we got Chinese yuan before we left. So we converted US dollars at a bank into Chinese yuan, or if you're traveling to Europe, you could do the same thing. They will extend loans for small scale foreign exchange transactions. They'll maybe even invest in buy and hold strategies for foreign currencies. If they feel strongly that one currency is going to be a better performer than another, they'll try to hold more of that strong currency. Hedge funds are large institutions that manage risk. They buy and sell currencies. They try to make money in the markets based off of currency pairs. So they lock in currency rates through forward or future contracts. They may even try to do things where they generate income based off of the spread. So if one currency is a large yielding currency and another one's a low yielding currency, they'll try to own the large yielding currency to make money off of interest rate differentials and things like that. So they're just investors trying to make money in the markets. And then finally, speculators or traders, and that's where we fall in. We are speculating on price movements. We are managing our own accounts. So these are investments that could have big price fluctuations. They can be buy or sell transactions where we're profiting from price moves. And a lot of people speculate, not just the individual investor. Most of everyone we just referenced, hedge funds will speculate, banks will speculate, market makers, and of course us, the retail customers. So all of these participants play a role in the market, and they're transacting and moving currencies around, which ultimately affects the price of these currencies long term. Hope you've enjoyed this class on market participants. Have a great rest of your day. We'll see you next time.